Great and beautiful morning and evening to you all, wherever you are joining me at this moment. Welcome to 297 edition of Investdata Trading Academy live with Ambrose. Yes, I would say that the global market across the globe as we speak now, the market across the globe as we speak now is still very much what? Very much mixed. And I will tell you that in US market, there's a negative shift in terms of risk mode in that environment as a result of the hiking or let's say escalating of China and the US tension, and also the poor performance of some big technology stocks following their earnings that were also below expectation. This also have moved market sentiment in US market, and also as we speak also these numbers that are coming in that environment. That's why we saw the banking sector or the big names in banks in that domain releasing a impressive Q2 number. The numbers that came from the tech sector was seen kind of a disappointing in terms of revenue. It also to reflect what is happening now that we're seeing that there some positive fundamental or macroeconomic data are coming from that domain. How I know the Fed going to do? Yes, if earnings are giving a signal, I tell you that earnings is also like we said, capital markets a lead indicator, and this earnings will tell you what is happening in the environment. But we can't conclude now. But seeing banking sector being impressive, we're seeing the tech sector now. We're seeing a mixed number. Don't forget that also this tech activities or the industry also contribute part to what happened in some of the banking banking in US that had issue because of tech issue and also the impact of rate hike and all those stuff. But as we're seeing now, this is also changing the kind of sentiment in that market right away. And this also has also filter or have a way of influencing what is happening in Europe market, Asia and Africa. Like I tell you that what happened in US market or US either Fed as a way of trickling down to every other the kind of domain or any other economy. This is why all eyes on what is happening in the Western world, especially when it comes to US, European and also Asia, zone. They want to see what is happening. But we'll see that within this period, we'll see how the rate hike has kind of led to economic contraction. But we're seeing that if you look at what is happening recently, we're seeing a kind of inflation cooling down across the globe, not only in US, we've seen it in Europe. Yesterday we saw the inflation data that come from that eurozone. We saw a drop from about 6.1 to almost 5.5. When you can see, so it's a general thing in England. We saw the same thing, and we're seeing this in global. Even in South Africa, yesterday we saw also that inflation is going up. That means the oil price not trading above $80, despite the global tension in Russia and Ukraine is trying to escalate. It's still on for more than a year now. But I think that this is not impacting more negatively as it started initially. You saw when it was started, there was a strong distortion, and that was saw well, because of energy was above $80, almost 90, above 90. We saw how it affected inflation. But still, with the recent the kind of a puller from the Green Deal from by Russia, it has the also going to affect commodity prices, which you also know that as far as we're having shortage of supply, the law of demand and supply, our secondary school economics, it still apply. Here, if the supply of wheat is not as much as compared to the demand, price will naturally go up, and that is why also looking at commodity market now. Now let's Ukraine with the world has find another alternative of moving this, which I know that they are thinking alternative of how to start also pushing wheat out of this grain out of Ukraine, so that the world will not go into hunger or go into especially another price hike in terms of all this commodity. We believe that this also have the world also played if they're able to have another alternative. But with all this, I'll tell you that what is happening right now, there's a lot of what these data that are coming and also reacting to activities in the mature economy. Like I mentioned earlier, that the the trade war or what we call the misunderstanding between China and and the U.S. tension is trying to come up. Why to the poor earnings? These are the things that are also driving market around that domain. Like don't forget that the China earnings also GDP or macroeconomic data have not been so friendly recently, and until China were able to come out of that zone, that is where we can see yes that this is where because the fear of demand or okay, fear of demand also affecting oil price. Even as we speak now, that most economy that are mature economy, they stock up what they need in their inventory, and that is why even when prices are going up and down, demand are going up and if all these worries, we are not seeing much prices. Even when Russia and Saudi Arabia recently going to kind of cut supply kind of output by August. Still, I will tell you that the war is not panicking because I tell you most of their inventory are still up, and that's why I see that oil price remains stable. But for those that are producers like ours, who might be having we want oil price to go back as 120 so that we can take advantage of the recent improvement we have seen in our production down here. With the new president, the new government trying to make sure that security is beefed up in the Niger Delta, and also oil theft is reduced to barest minimum. We are seeing all that coming up, but how are we going to benefit from it now that we are coming up while oil price is relatively low, below $80? That means anytime it goes above $80 to 90 and 100, that will be a better thing for the producing economy or the producing nations like ours. But I believe that it's a good move that in our oil sector we're trying to come up so that at the end of the day we want to use to beef up our foreign exchange so that at the end of the day we can also have something to show that yes the new exchange rate will have kind of a buffer that provides supply for because I tell you the more oil price going up and we're selling and we're meeting up our quota, the more we're going to have income that will support what our new exchange policy. I believe that these are the things we want to look at as a also investor when we are looking at this market. But also, like I mentioned earlier, that in Europe market, we are seeing that the market is also at this point it's also very very mixed. Just as I said earlier, that the market across the globe, I mean, the European market is not left behind at this moment. I tell you that I'm also digesting the corporate earnings that are coming from the tech sector. Seeing particularly that they are seeing kind of a French, the very 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 fragile kind of growth in that industry. And what are they looking at? They want also kind of represent their portfolio. Like I said yesterday, that it is time for every investor in the market, trader or investor, traders or investor, you need to do what we call sectoral rotation. I said it and I've been saying it. It's not time for you to hold push because I tell you, stocks are not a woman that will say will marry, are not wife that will say will marry and will hold on to them. You need to know exactly when to move out from one particular sector or industry, especially what is happening around the globe. Even we are seeing improvement, fundamental in mature economy. There are also industries that are not come up to that level. It's not done on you as a trader or investor to see how you can represent your portfolio to that area or that sector where you see that there are kind of a signal of better world, better performance, either in terms of policy from government or in terms of improving the fundamental you are seeing around the economy. That will also guide you to know exactly what to do at this period. Don't just hold position for holding sake. I tell you that is the way to go now. You must move from one sector to the other, from one stock to the other. That's why profit taking anytime, any day in the market is encouraging. I don't deserve not to put profit because if there's no profit taking, there's no opportunity for you to buy low and sell high. And once you are hit your target, take your profit. Like this morning, we have send that a sell alert to some of the stock that will say yes, they fit their target. They might also have some fundamentals or some information that will need them up to up higher. You know that, but because you must follow your trade pattern, your trade plan, you must follow it. That's why, because in Investdata, we practice what we preach. Whenever I say there's a target for any stock, either in the master class, in the buy and sell signal, once you have a target, we make sure that that target is kept to. Once you hit that target, we'll tell you what to take position, to take your profit. You can try to plug it back, just to wait all the support, but we must give you a lot as at when you, especially those that attended the master class, they also have they are in buy and sell signal. Even those are also that part of the Q&A section, you see that after that we are giving, we also come back to tell you that this is the time for you to sell. You must also put this practice work in your own personal investment. You must have a goal and also you must trade that plan because this is only way you can go right away. And as we speak now, like I said that in Europe market, their market is also mixed. This has a lot of what the figure that came from that zone. I told you about inflation, and also next month all eyes on what were the ECB will be doing, European Central Bank will be doing in terms of rate. And I'll tell you, it has been also pointed that because even though the rate slowed down in that zone, that 25%, 25 basis point hike is also expected. But in US, as we speak now, with improved macroeconomic data that I've seen so far, they are very dicey, or they are very in the situation that whether Fed will still go ahead and increase the last rate for to end the the hike cycle that have started for more than a year, where they have increased their interest rate to more than 500 basis points. Is that what they're going to do? These are why that market now to speak now. There's no clear direction. And that's why I see today market is up there, tomorrow is down until a clear direction is given from that Fed. Don't forget that the interest rate no hike has a way of directing flow of funds in any economy, and that is why all eyes are in that. Because I told you on Monday that on Tuesday that in that domain we saw that bond yield hit almost the lowest so far this year in the sense of what is going to happen. And if you see bond yield hitting lower this year in the bond market in that environment, it also tell you that it's a plus for the equity market. That means bond is not going to attractive. That is how to invest in any any economy where we must look at what is alternative investment do returning, what is it doing, because it will be able to balance your portfolio. Right there in Asia market also a bit flat right as we speak now. And if Asia market flat, I am not surprised that that market is flat this moment, because it's expected that as far as that zone is concerned, yes, we see that Japan has started contrary to what is happening in the world, even also China, but still because of the low recovery in China, I think that is also affecting that environment. But for Japan have stayed opposite no hawkishness or hawkish nature of most central banks. They are all remain in their world of easing their own monetary policy just to put the economy, which China has also adopted. But still, China we have not seen something happening. But I'll tell you, in general, I'll tell you, there's a pointer that now we're going to see rate adjustment down gradually, because we're seeing that inflation have cooled or start cooling off, and that to say that the impact of the rate hike by the central bank of this domain has also acted, has also had effect or have needed result that by if we are seeing. But here in Nigeria, I think the topic is different. We are seeing that even when we have no more than 700 basis points in terms of rate hike from May till the last MPC meeting, we are still seeing that our inflation continue to move in the north direction. But I believe that from the body language of the new administration, and if you remember what the first language he said on the first day, that they're going to reform the monetary policy, that's to tell you that they are not interested in in rate hike again. But they're going to, because for you to achieve the 6% growth that they are targeting, or they are forecasting, or they are looking at, you need to provide liquidity, and that means you are not trying to attract foreign investors at this point, because other policy they've touched are also has the way of attracting foreign investment if they can stabilize the FX market with the inflation of dollar. But in terms of the economy now, with what inflation is doing, like I said yesterday, if you remember that in any economy, you can as a CPI, as a central bank or monetary policy, you can't control your exchange rate, control inflation, and control rate at once. Now I believe that the exchange rate have been left for market forces. Also, the inflation has gone up, and I don't believe that they're going to either increase rate again. These are the things we want to look at this point. And don't forget that stylishly you can see that the CPN has started also reducing the what we call the cash ratio, the CCR ratio gradually. You see what happens to the mortgage bank from 32.5 to almost 10. That tells you that they want to ease some fund that is under hold with the central bank back to the banks to have access to fund to play around. And that also tell you that if the banks have liquidity within their coffer, likely that the banks will also be rushing to collect money from the public, either with a high interest to attract a fund for fixed income and all the stuff. You can see that generally you can see they try to like bring rate low, and that will tell you that you need to look at your portfolio. Which sector are you going to look at now? Are you going to look at the fixed income market, the bond market? And I'll tell you generally, look at all the bonds that have been being a kind of showcase or being moved to the market, released to the market for activities. I tell you, the highest there is about 16% yield, and inflation about 22.79. Before we know it, we already enter about 23% in terms of inflation, and that means you are already negative, which you know. And that means the only way you can hedge against inflation is what to go to equity market, but might see likely fund coming to the market, and also most of the companies that are driving this equity market are those sectors that will see opportunity that what is happening in the economy is going to impact these sectors very well. For example, you saw what happened in the in the FEC, the federal allocation. See the first time that they're sharing almost 1.20 trillion in that way. something happened, it's because of the new exchange rate that have boost return because of what before the exchange rate have been around the 458 official rate, but now you see because of the the regulation of that sector or inflation of that exchange rate, you can see that it have kind of boosted their reserve. Also, don't forget that also what they remove from subsidy, removal or not pay, also they forget that they always be converting the dollar at the official rate. But now the new rate, we expect this one to boost the bank. Not only that, the interest rate also have been a plus to the bank, and also the bank also trading other commodities. And I tell you, because of this also exchange rate, a lot of trade in terms of currency has also improved in the banks. I tell you, banks have a lot of things that are going to, and that's why they remain the flagship of investor or the toast of investor. Let me use that way as we speak now. And I tell you, this is going to reflect on their number even in Q2 and Q3. I will support these banks to still move higher in terms of value. And also with this exchange rate, we expect that as foreign investors are coming, the first place they want to look at is the most regulated sector where there is stability, which is also the banking sector. I believe that that is a half a way of speaking for the banking sector, but an other also service sector, like I've said yesterday also, we need to look at them now that we're planning our portfolio, because we need to know where to be, because having a defensive or a complete balanced portfolio that even when rain comes or sun comes, you are balanced, you are there, whether there's no water, it is above water or under water, your portfolio is protected. Is very, very key, because it is your hard-earned money. You need to also protect it at any time. That's why I say even when we are buying the low cap stock, we are buying value stock, growth stock, defensive stock, you must balance then your portfolio so that you know how you're going to allot some resources to all this one, and also have it in your portfolio. At the end of